The following program is being brought to you on the Voice America Business Channel. For more information about our network and to check our additional show hosts and topics of interest, please visit voiceamericabusiness.com. The Voice America Talk Radio Network is the worldwide leader in live Internet talk radio. Visit voiceamerica.com. The views and ideas expressed on the following program are strictly those of the host or guests and do not necessarily reflect the views and ideas held by the Voice America Talk Radio Network, its staff, and management.
The following radio program is for informational purposes only and is neither specific nor tailored financial advice to any individual. It is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Always do your own due diligence and consult a financial advisor before making any investments. Investing involves risk, which can result in the loss of any or all principal. Peter Weitz is a registered investment advisor with Fusion Analytics Investment Partners, LLC, an SEC-registered investment advisor, as well as a registered rep with Fusion Analytics Securities, LLC, a FINRA registered broker-dealer and SIPC member. All views expressed in this program are those of the host or guests and do not reflect the opinions of Fusion Analytics Investment Partners nor its affiliates. Your investments. How secure are you that they are secure? Do you want to know more about investing, retirement, and moving to the next level in business? Welcome to In Black and Whites, featuring host Peter Weitz. Our program will answer all of the questions about your future and so much more. It's all about smart business and smarter investing. Now, here is your host, Peter Weitz.
Hey, good afternoon. Good morning, actually, it is. Thank you for joining. I am Peter Weitz. You're listening to the In Black and Whites radio show. I just want to follow up real briefly on our show last week. We got a lot of feedback regarding the statistics that were put out on the show, and I want you to know that there's going to be more statistics today, along with some really interesting information with regards to the statistics. Real quick, I want to thank our sponsors, Stephen Douglas and Associates, the law firm of Retzel and Andrus, and our newest sponsor, American Century Investments. Before we get going, feel free to follow us on our blog at inblackandwhites.com. Whites is spelled W-E-I-T-Z. You can also pick us up on Twitter using the @ followed by Peter Weitz, or LinkedIn at Peter Weitz. To dial into the show and listen, ask questions of our guest today, who I'll introduce in just a moment, please dial 866-472-5790, or you can email me at peter@inblackandwhites.com, and he'll be happy to answer your questions. So before we get started with our guest, I just want to talk a little bit about some macroeconomics that are going to lead into the discussion that we're going to have today, and it's relating to unemployment. If you look at January 2014's national unemployment rate, that includes all workers, it was about 6.6%, which is down from its high in 2009 of about 10.2%. So what does that mean? Obviously, that means there's job growth, which means the economy is growing and spurring new development and investment. And if you actually look at the sectors that are improving the most as of the January 2014 unemployment statistics, you'll see that construction, manufacturing, wholesale trade, mining, business and professional services, and the leisure hospitality sectors have seen the most growth. If you've been following the shows that we've had, you'll notice that when we did our investment theme episode several weeks ago, we talked about growth in the vast majority of those sectors, and the unemployment numbers are continuing to support that. Sectors that have remained steady throughout that period have been healthcare, transportation, and financial services. Today, we are going to focus specifically and hone in on one of the sectors seeing a lot of growth, and that's the business and professional services sector, and a little bit of spin-off related to that. And joining me on the show today is Matt Shore. Matt is the president of the boutique executive recruiting firm Stephen Douglas and Associates, and Matt has been instrumental in driving change and growth across all aspects of their firm, including business development, recruiting, public relationships, and leadership. He's also co-founder of the company's Project Resources Division, which is a division that focuses on project-related employment as opposed to permanent. But his background speaks to itself. Prior to joining Stephen Douglas, he spent 10 years in a leadership role for a Fortune 500 recruiting firm, most recently as the managing director for the entire Florida region, as well as their professional services division. Prior to that, he was in in the audit practice at PricewaterhouseCoopers, where he was a CPA. Matt is a graduate of the University of Florida Gators, and throughout his career, he has been instrumental in focusing on a lot of civic organizations, including the United Way, Cystic Fibrosis, the Jason Taylor Foundation, and the University of Florida. He's a current chairman-elect of the United Way of South Florida, and he has received numerous rewards and awards, including South Florida's Top 40 Under 40 Mover and Shakers and Influential People. So with that, Matt, I want to re-welcome you to the program, and thank you for joining us today.
My pleasure to be here. Thanks for having us.
I want to start out the show, and we titled the show "The War on Talent" because really what we're going to get into is the paradigm shift that's happening in the recruiting and employment world. But I wanted to start it out with a brief quote from Confucius, and I thought, Matt, that maybe you would opine on that quote once I deliver it, because I think it speaks to really what we're going to talk about today. And the quote is this: "Ability will never catch up with the demand for it." And if you follow sort of what the quote means, they're basically saying that we're always going to be wanting capable people, but there's never going to be enough of what we think we need. And I think from a macro perspective, is that what you're seeing is going on in the employment world?
Yeah, that actually, I haven't heard the quote before, but I would say that applies to what we're definitely seeing. You know, we just to give the listeners some context. You know, I'm based here in South Florida, and I've been in the recruiting industry for the last 18 years now, and primarily focused on the search side of our business. And so a lot of what I'm going to be speaking about talks to the South Florida market, but I know from other colleagues around the country that that the areas we're going to talk about actually apply across the country right now. But in the sectors that we're recruiting, and primarily in the areas of accounting, finance, and IT, war for talent is definitely a great way to describe it. And I would say that many of our clients would definitely agree with Confucius that finding people with the abilities that they're hoping to find, they're never going to be able to find them as quickly or as readily as they want to find them. So it's definitely a good applicable quote for what we're seeing out there.
Well, and that's also, I think, real important, because you hear a lot about how, we're losing jobs overseas, we're losing jobs to third world countries. But if what you're seeing from a demand perspective is that there's more opportunity than we actually have the capacity for, I think that speaks well for the long-term success and long-term future of our job market. Do you agree with that?
Oh, definitely. I would say, some of those companies that are creating jobs overseas are also having to create jobs here to support those, the operations that they have overseas. So I wasn't prepared really to speak about it, but I mean, we have one call center client that is definitely expanding their operations overseas, but they're having to build out their corporate headquarter functions as well to support all that growth. So when you have a call center overseas, you still need IT professionals, accounting, finance professionals, HR professionals, and sales folks here in the States to drive the business. So, sometimes those things go hand in hand. There's job creation overseas and job creation here in the U.S. at the same time.
That's great. And hey, Matt, I wouldn't be doing my job if I didn't pepper you with questions that you weren't prepared to answer. So get ready for that.
No problem at all. Happy to do it. Happy to do it.
So walk me through where the job market was, say, pre-2008, before the last recession. What was going on from both a employer perspective and from a employee perspective or job prospect perspective?
Okay. Yeah, so we actually, I mentioned before, I've been doing this now for 18 years, so I've seen a couple of cycles. And I would say the dot-com days in the late 90s were followed by a blow-up and a recession, and then we actually recovered nicely from that. And as you're speaking about kind of the mid-2000s, when we got into that 2004, 2005, 2006 timeframe, companies really were having to work very, very hard to keep their best talent and to attract, new and better talent to their companies as they were expanding. And, it seemed like the stock market was going great and the economy was expanding nicely. You really wound up with a difficult market to fill critical types of positions. And I would tell you that, the certain areas hotter than others in any cycle, and obviously there's different sectors and different types of positions that wind up being hotter than other areas. But we definitely saw companies having to be very creative in the mid 2000s and be very aggressive in keeping the people they have. And also being aggressive in going out and, really putting on a good show and making it attractive to join their company, in the different ways that they were trying to attract people.
So then, obviously, 2008 hits. Companies are laying people off, downsizing, bankruptcies, and so forth. Now you've got this big applicant pool that's out there. What do you see with that applicant pool? What's going on at that time in 2008, 2009?
Yeah, so when Lehman went under, if you're a perm recruiter in the search world, it was, especially if you're focused on financial services, it felt like the end of the world because the search market and companies willing to pay fees and the availability of candidates really spiked, right? So, our business definitely got tougher. Yeah, we happen to be very fortunate in that we have the variable resource or the project resources side of our business, which helped us in the down economy because what happens is companies start using more variable talent to help get the work done when they're experiencing kind of layoffs and downsizing and that sort of thing. So it helped helped one side of our business, but on the search side of our business, yeah, you wound up with there was more candidates out there were more candidates out there than there were good jobs for those candidates. And so let's just say that we spent a lot of our days receiving phone calls and unsolicited emails from all over the country from candidates that were down on their luck and in protracted job searches and really feeling like they weren't really sure where their next paycheck was coming from. It was a pretty scary time for a lot of people.
I can imagine. So now 2012, 2013 roll around, and we're seeing a change in the marketplace. Briefly touch on what you've seen happen, and then we're probably going to touch more on it as we get deeper into the show. But what are you seeing currently?
Well, we're definitely seeing a shift. And again, just to give the listeners context, I'm headquartered in South Florida, and a lot of the work that I personally do is in South Florida. And we're also focused on the white-collar workforce here. Really, companies are hiring our firm to find experienced professionals. So I'm only mentioning that just so they know the context of it. So people come to our firm when they want to find an experienced staff to senior level manager or executive in areas like accounting, finance, and IT, and HR, and those types of areas. And what we're finding now, probably middle of 2012, I would say, was when the shift happened, and then 2013 we'll expand on how it's really shifted to the employees market again in those particular sectors. Somebody who's got 3 to 15 years of professional experience in a degree or an advanced degree, some certifications, and specific experience in certain areas. They feel like this is the best economy they've ever seen. They're getting job offers left and right, and I'll let you ask me some more questions about that. But there's definitely the market has shifted in the candidate's favor again.
And I thank you. And we're going to talk about that significantly later on in the show. But I think, Matt, this is probably a good time for us to take a quick break. You're listening to the In Black and White's radio program on the Voice America Business Network.
When it comes to business, you'll find the experts here. Voice America Business Network.
Climbing Mount Everest is an amazing feat, and many have died trying to do so. However, more people have died descending Mount Everest than in reaching the summit. Part of the problem may be that people are so focused on reaching their objective that they fail to plan appropriately for what they will do or should be prepared for afterward. Similarly, people are so focused on saving for retirement and reaching retirement that they fail to plan appropriately for what they will encounter once they have actually retired. With 1 out of every 4 65-year-olds today living past the age of 90, you may be retired longer than you are actually working. Have you devised a plan, process, and discipline to ensure that you will not run out of money? If you are not sure what to do, then simply contact Peter Weitz and his retirement team at Fusion Analytics. We help manage human emotions using 3 proprietary investment techniques. Our job is to evaluate the forces that the typical investor can't see so that wealth is preserved and not lost. Find out more at inblackandwhites.com. Whites is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. In Black and Whites, we win by not losing.
Stephen Douglas Associates, delivering talent, impacting results. Now celebrating 30 years of bringing top talent to some of the nation's most recognizable companies and private equity firms, whether they need highly qualified executives permanently or on a project basis. Recognized by Inc. magazine as one of the fastest growing companies in America in 2012 and 2013. To learn more, visit us at www.stephendouglas.com.
When it comes to business, you'll find the experts here. Voice America Business Network.
You are listening to In Black and Whites. To reach Peter Whites or his guest today, please call 1-866-472-5790. That's 1-866-472-5790. You may also send an email to peter@inblackandwhites.com. Whites is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. Now, back to this week's program.
And welcome back to the show. My name is Peter Whites. Prior to the break, we were having a discussion with our guest, Matt Shore, the president of Stephen Douglas Associates, regarding sort of this shift from an employer's market to an employee's market. And I kind of want to follow up on that a little bit, Matt, in that you made a comment to me recently about how the rules have changed, and those rules have basically listed the employee as the one with leverage over the employer. And I just want you to expand upon what you really mean by that.
Sure, happy to. It's a great question. We are, again, focusing our conversation around kind of mid-level to senior level professionals, degree type of folks, just in case somebody's just joining us. And what we're seeing right now is that the people that we're dealing with these specific skill sets that are in high demand, specifically I would say accounting, finance, and IT are probably the hottest areas. We're also seeing it in the sales ranks, is that there are a lot more jobs out there right now than there are talented and experienced people for those jobs. And the candidates have figured it out. And unfortunately, some of the companies haven't figured it out yet, which is creating some challenges filling positions. So positions are staying open a lot longer than they hope to. But definitely candidates are feeling like they have the upper hand because they're getting called by recruiters. They're seeing tons of different postings out there. They're having old colleagues that they used to work with call them and say, "Hey, my company has openings. Are you open to things?" And so, now they're seeing multiple opportunities at a time, and they're feeling like they can pick and choose who they interview with and which positions they ultimately take.
And so, I mentioned in the beginning of the show, Matt, that, and I'm just going to generically say nationally, the unemployment rate is 6.6%. I think in Florida, it's actually slightly below 6. But if your comment is that the rules have changed and you're having tough time finding employers, I've seen it, or I've heard you mention a statistic of roughly 1 to 2% of an unemployment rate. I mean, is that about the right number in this, mid-level, highly skilled level workforce?
Yeah, and again, I would say I've used that quote, and 1 to 2% is I think very on target as it relates to accounting, finance, and IT specifically, which are those are our biggest practice areas on the search side. But I think that if you asked some employers that are trying to hire those types of folks, and you asked other professionals in my industry that specialize in those fields, I think they would agree that 1 to 2% is pretty on track. Now, I'll give you another statistic that we had found. You mentioned earlier that the national unemployment rate's down to 6.6 from 10.2 at its peak in 2009. I don't know if it got up maybe to 10.4, but we actually had done some research back when it was at 10.2 or 10.4% back then, and figured out that when the economy was at its worst, across the country at 10.4%, we were able to identify that if somebody had a college degree and they were 25 years old or better, meaning they had a few years of post-college experience with a college degree, the unemployment rate at that particular time, at the peak of unemployment, was 4.6%. Okay, 4.6% from 10.4.
Which actually, Matt, boggles my mind because it's so. No, I said that boggles my mind because it seems such an unhealthy low for an unemployment rate for highly skilled workers. I mean, what's missing here? I mean, what are we not educating the job force properly to get enough people out there? I mean, it just seems it's so low.
Yeah, 1 to 2% is scary. You know, for 4 to 5%, you could say is full employment. We're feeling pretty good about that. And you know, I wish it was across the entire economy. You know, we have a large, unfortunately, you know, kind of unskilled labor force here in the U.S. And unfortunately, we have lots of people not even graduating with high school diplomas, let alone ever going to college. And it's definitely a big challenge for this country that, you know, hopefully we'll figure out some of the ways that we're going to solve that. But, you know, you wind up seeing that there's you know, high unemployment, and yet there's a lot of jobs that go unfilled because we don't have the right skilled labor for those jobs. And it's just a little bit of a, you know, a scary dichotomy on how do you tackle that issue, and how do you get people more, you know, training and education to be able to fill those roles. But yeah, we definitely have a shortage of good, again, specialized talent right now. In different parts of the country are hotter than others.
Well, do you know what some of those areas of the countries are?
Well, again, I'm dealing with South Florida, and it just seems like it's been a pretty resilient economy. But you know, I'm hearing from our folks in our New York office, you know, finding IT talent. And you mentioned the financial services sector is a little stagnant right now as one of your sector watches. Finding IT talent in Manhattan, you know, and on Wall Street is it's incredibly difficult right now. You know, so I've heard that the DC market is absolutely on fire across most sectors as it relates to you know, unemployment. The economy up there is doing phenomenally well, and we've also definitely heard, and we don't have offices in Texas, although we have clients in Texas. That you know, there's 2 or 3 cities in Texas that seem to be booming as well right now. So definitely, you know, there's some nice pockets in the country where there's some real good expansion going on.
So let's just you know, take a side real quick. I mean, for those that feel the economy hasn't recovered or isn't recovering fast enough, you know, from what I gather, and I mean, by no means is this a political show in any way. I'd imagine that, you know, that is a good indicator of what you're seeing in that we're actually experiencing better growth than perhaps what we might read in the media.
Well, we are experiencing, and you know, I'll relate it to our business, right? So we've been in business now. We're celebrating, fortunately, our 30th year in business this year. And you know, again, being in the search business, that means companies are paying us a good amount of money to help them find talent, right? So they're only going to pay us to find talent if it's hard to find talent. Our search business in 2013 eclipsed our biggest year ever revenue-wise by 30%. Okay, 30 years in business, we did more search revenue last year, 30% more than we have ever done in 30 years. If that gives you any indication of if companies are having to pay fees at that level, then that means they're having a hard time finding talent, right?
Absolutely. And I'd imagine it also makes your job a lot more difficult to be able to get the talent there. And we're going to talk about that, I think, at length. But before we do, if I'm an employee, what am I thinking about right now? I mean, what kind of feedback are you hearing from the people that might consider a job change?
Well, I think that you know, everybody's always looking to better themselves, but I think what I'm hearing from them is you know, they have kind of a laundry list of reasons why they might, we call them pushes and pulls, but reasons why they might consider, you know, leaving their employer. You know, many times it's not because they're even necessarily unhappy or dissatisfied with their employer. You know, it's called running towards something versus running away from something. They've heard from their friends, They've heard from their colleagues that they're getting bigger offers and better offers. They're getting called by recruiting firms about great opportunities again that seem like they could be a step up in their career, and I think they're feeling very confident right now. It's amazing, and I think maybe in the next segment we'll be touching on this more. But it's amazing to see how many people are turning down the opportunity to interview for companies. But even after they do agree to go on interviews, how readily they'll just turn down a second interview opportunity, or turn down an offer, or turn down multiple offers. Again, people only do that when they're feeling very confident, one, about their current position, and two, feeling very confident about the economy that, hey, I can turn this one down because there's two or three right behind it, and I'm going to get to pick and choose where I go work because I'm a hot commodity right now.
And are you finding that in some of your data that it's not necessarily financial that's driving what's making these employees change or not change? It's not always about the salary, but might be something else.
Yeah, I think sometimes it's about equity, right? Opportunity to share in the upside of a company. Sometimes it's about a company being a better financial situation. So the job may pay a similar amount to the job that you're making, but maybe the company's growing, doing more exciting things. A lot of times people switch jobs because they'll get to expand their skill set. Work with a new system, maybe work with a really talented, senior leadership team. Maybe they're trying to pick up a new industry experience because they feel like the industry they're in is a little stagnant. So there's a lot of reasons why somebody might consider leaving an employer, and that's really our job. Our job is to identify, what are the things that might get this passive candidate to consider going to one of my clients, right? And to try to identify those things that are going to kind of, like I said, pull them out of the job they're in today. But it can be any number of reasons why they might consider. And a lot of times it's a combination of those things. It's title, it's opportunity, it's industry, it's location, it's again, it could be equity, it could be benefits. It could be hours, right? It could be the culture. It could be how people are treated. Maybe they're working in a sweatshop, or they're working under a manager who doesn't treat them very nicely, and they hear that another company has a better culture, and they treat their people better. So there's a lot of reasons why they might switch.
And as a follow-on question to that, one of the things that we see here, I'm in the financial services industry, is we get to place a lot of initial public offerings, and we get a lot of syndicated stock. As a result of that, last year we saw a record number of companies go public, and we expect that to be eclipsed in 2014 over 13. Do you think at all that some of these candidates are going to consider taking a chance going with a company that's going public that might just be getting started, with the risk that they could hit it big time like they did maybe in the .com era, or are they a lot more conservative in their decision making?
Again, that all depends on the person, but I would definitely say that the pre-IPO opportunities and the private equity opportunities are very attractive to folks these days. We deal quite a bit with private equity firms, and in addition to the companies that are being taken public, there's definitely a lot of money out there being invested in emerging companies and or turnaround situations. And if you can get into a private equity-backed situation, you could potentially have the same equity opportunity to share in the upside of the turnaround and or the growth and sale of a business similar to an IPO. It's just a different type of sale, right? It could be sold to a strategic buyer and or another private equity firm versus being sold to the public market like an IPO. But I would definitely say that's an attractive client for us because you have a story to tell. People want to build a resume. They want to be a part of something. And if you're in a company that's kind of stagnating and not really doing much, and you have an opportunity to kind of build the resume, build the skill set, and be a part of something exciting that might have some upside, that's a phone call people want to receive.
Yeah, and I'd imagine that with what you've been saying about the job market, it makes a lot of sense that they can afford to take the risk today, knowing that they've got other opportunities. So if it doesn't work out, they've got other opportunities in the future. Matt, I really appreciate that. We're going to take a short break. When we come back, you're going to outline for us some of the things that you're explaining to your companies as they go on a search as how to attract and retain the best talent. You're listening to the In Black and Whites radio program on the Voice America Business Network.
From the boardroom to you, Voice America Business Network.
Stephen Douglas Associates, delivering talent, impacting results. Now celebrating 30 years of bringing top talent to some of the nation's most recognizable companies and private equity firms, whether they need highly qualified executives permanently or on a project basis. Recognized by Inc. magazine as one of the fastest growing companies in America in 2012 and 2013. To learn more, visit us at www.stephendouglas.com.
Climbing Mount Everest is an amazing feat, and many have died trying to do so. However, more people have died descending Mount Everest than in reaching the summit. Part of the problem may be that people are so focused on reaching their objective that they fail to plan appropriately for what they will do or should be prepared for afterward. Similarly, people are so focused on saving for retirement and reaching retirement that they fail to plan appropriately for what they will encounter once they have actually retired. With 1 out of every 4 65-year-olds today living past the age of 90, you may be retired longer than you are actually working. Have you devised a plan, process, and discipline to ensure that you will not run out of money? If you are not sure what to do, then simply contact Peter Weitz and his retirement team at Fusion Analytics. We help manage human emotions using 3 proprietary investment techniques. Our job is to evaluate the forces that the typical investor can't see so that wealth is preserved and not lost. Find out more at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. In Black and Whites, we win by not losing.
Voice America Business Network, the bottom line in business.
You are listening to In Black and Whites. To reach Peter Weitz or his guest today, please call 1-866-472-5790. That's 1-866-472-5790. You may also send an email to peter@inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. Now, back to this week's program.
Hi, thanks. Welcome back to the show. We're joined today by Matt Shore, the president of Stephen Douglas and Associates, and we've been talking about the war on talent, or more specifically, the war for talent that companies are facing. Matt made a couple comments earlier in the show about how the rules have changed again, and the leverage has shifted more towards the employee versus the employer. And I actually was going to comment real quickly that I happen to see a lot of that. For those of you that know, I manage 401k plans, and I'm out visiting with the clients from time to time. And one of the things I'm seeing specifically in that war is a shift from not having a corporate match to having a corporate match inside the 401k plan. More importantly, just to compete against the applicant pool that's out there. And we're going to talk about that now because what we're going to get into with Matt is some of Matt's guidelines and guidance that he gives to his employers in order to engage into a successful search. And Matt, again, we estimated in the past that with such a really tight job market, companies really have to know what's going on and evaluate the market in order to be able to fully gather the best talent and attract the best talent, and even more important, to keep their best talent from going to their competitors. So the first comment that first guideline Matt gives to his employees, and Matt, I want you to talk about this, is take stock in your existing team. So give me a little idea of what exactly you mean by that.
Okay, so you're speaking to the employers, correct? Not the employees?
Specifically to your employer clients.
Okay, got it. I'm sorry, couldn't hear you. So yeah, as far as our clients are concerned, we spend a lot of time counseling them, giving them advice, and one of the first things before we start digging into, hey, what openings are there and what jobs do you need to fill, is when we're talking to them about the process and what their what positions might be coming open, we a lot of times we try to advise them on taking a good look at the existing team. I put here, take stock in the existing team. Really, the smart thing that a client can do with us is call us up and ask us, hey, if I tried to hire this person in the open market right now, what would they be able to demand? Right? Look at what you're paying your folks, right? Because if you're not paying them appropriately and you're still sitting back thinking the economy's not that good while other people are calling them and offering more money, you're putting yourself at risk. The other thing is companies are enhancing. I'm glad you brought up the 401k situation because companies are, again, looking at their benefits, they're looking at their offerings, they're looking at what can we do different to make ourselves an employer of choice or the best place to work in the local market. So you really have to look internally and say, what are we doing to not only attract these people from the outside, but what are we doing to keep the people we have here? From a compensation, from a benefits. If you haven't paid bonuses, you better start thinking about it, right? If you haven't given equity, that might be something you want to consider doing again. If you stop the equity program, you might want to put in a long-term incentive program to retain people, where they have to stay a number of years to be able to really see the benefits of the long-term incentive plans. And then the other thing is you really have to look at opportunity internally. I'll just add that last comment is, people want to move up, they want to move around, they want to do different things, and they want to, build on their resume and they want to build on their experience. So, you also have to look at, am I keeping these people in a role too long? Right, and are they going to stagnate and get bored and maybe start looking elsewhere?
And I think, Matt, we talked about this, and we've talked about this at length. You mentioned that, and I agree with it, that if you don't take stock in your team, it could and we talk about increasing benefits, 401k matching, and so forth. So there's a cost associated with that, but there's more likely a greater cost to replace somebody that leaves.
Yeah, and I don't have any statistics because I wasn't prepared necessarily for that question, but I'll tell you that there have been plenty of studies out there done at the cost of turnover. Let's just say that, going out and hiring somebody to replace my last phone call before I got on the radio show here was a CFO calling me to tell me that he just lost his long-term controller. And chances are they were taking her for granted in some regard, right? And I would tell you that, replacing somebody who's been with your company for 8 or 10 or 12 years, you don't realize the level of productivity. If you would have just maybe paid them a little more or given them a new opportunity internally, you could have kept that intellectual, knowledge, and experience, in the company. And, you have to pay, maybe potentially a recruiting fee to rehire the position, probably pay more money to the person coming from the outside than you were already paying. And then it's the time, that's lost, while they're going up the learning curve and trying to figure out the job. Right. So it's a pretty daunting thing when you lose a long-term employee.
Yeah, I can imagine. So taking stock in your team is important. You also say that when you're hiring, you need to understand and calibrate the market. So are you educating your employers on market conditions?
Yeah, we are spending a lot of time, talking about, what they're really going to need to pay to find the talent they're looking for. We're educating them on a lot of things, their process and other things which we'll talk about. But when it comes down to calibrating the market, they can't go into a job search right now in 2014 with the mindset that they did in 2011. Right? We're telling our clients, that mediocre offers are not going to get great candidates. Great candidates want great offers, or at least above average offers, right? So you're just not going to be able to, lowball and come in at the bottom of your range and try to, get the best talent available. You get what you pay for in life. And if you want me to go out or somebody to go out and find you, a great person at that level of experience and somebody who's got a lot of upside potential that's going to be able to positively impact your business, you're going to need to pay appropriate, dollars. And again, you may have the right salary, but if your benefits cost $1,000 a month more than the next company, or you don't have any type of bonus compensation, you're probably not going to win out. So you really have to look at it holistically. What am I asking this person to do? Do I want them to travel 70%, work 80 hours a week, and I'm only going to give them a cash salary and no bonus, no equity? So you really have to look at the overall picture of, what do I need to hire, and what does the market look like? Because, you could waste a lot of time in a search, which we unfortunately wind up doing, going out and finding people and then not being able to actually get somebody on board because the offers you're putting out there are just not going to be, are not going to be appropriate to pull them out of their current role.
And that makes a lot of sense. And I'd imagine that because of your involvement and your deep roots in the market, you've got a pretty keen sense of what the numbers look like that you're able to really guide and coach your employer clients.
Yes. And for me, it's specifically the accounting finance world because that's really my background and where I do the bulk of my recruiting. But I have experts here that really know the IT market and, hey, what's it going to cost me to hire a top Java developer? Or, if I'm looking for a sales leadership position, what's a top salesperson in a particular industry going to need to make a change? And I think that's really important. And again, the companies that are having more success are the ones that are willing to spend time on the front end doing that calibration. And that way, when they go into the process, they don't wind up wasting their time. They don't wind up wasting candidates' time. I can't tell you how many companies go out and interview people that they just can't have because they're just not setting the right expectations.
Right. And the next comment you make is to inspire candidates. And I want to focus specifically on something that you say. Make sure your recruiters understand what they're recruiting for and don't just screen candidates. You need to be able to sell the position, the company, the culture, and the opportunity if you want to get the best employees that are out there.
Yeah, that sounds like something I would say. So I would tell you that it's really disappointing from our side of the table when we spend weeks and weeks and weeks trying to identify that top candidate with the right skill set that's in the range that we feel like is just going to be a great fit for our client, and then we put them on the first interview. And it falls flat. And then what I mean by it falls flat is, sometimes the internal recruiting arm or sometimes the person doing the hiring forgets that it's a good job market and that these people have choices. And so they go into this, robotic mode of I'm just going to interview this person and I'm going to vet them and I'm going to make sure they can do the job. And they spend no time inspiring them, no time selling the company or the culture, right? They drill them for an hour, and the person who just, took time out of their day to come interview you there gets in the car and calls their spouse and says that was a waste of time. And so I would tell you that, people want to, especially if we're asking them to leave a job where they're doing fine, right, to join this great company and this great opportunity we have. If the client, and again, if companies are doing this hiring on their own, it's important that their internal recruiting arms are doing this. They really have to make a great first impression. People get excited when they hear that people who work there are excited. They get excited when they hear that there's opportunity. They get excited when they hear, or they get a sense for the vision of where the company is going. And hey, if you do a great job in this role, we have a track record of moving people up or moving people around. And with this new acquisition we did or this new business line we're opening, there's going to be, all kinds of opportunity for somebody like yourself. And I think too often that gets lost. And so, whether it's just a first interview or you're going through a slate of interviews where there's, 2 or 3, 4 people on the interview, itinerary, a person will go through and they'll come out like, okay, well, this company, while they have the right opening and the salary sounds pretty good and the job maybe sounds pretty good, I don't think that I'm going to leave my job to go there. And so when they get called back to come for the second interview, they say, yeah, I'm not really that interested. Oh, why? What happened? And we know what happened, right?
Exactly. Well, I think that's interesting. We're going to finish up the last segment, Matt, with you, and I'm going to talk about a couple of strategies, but I'm going to give you a thought when I come back from the break about my interpretation of what's going on with the market, and hopefully it resonates with our listeners. And we're going to do that in just a minute. You're listening to the In Black and White's radio program on the Voice America Business Network.
Voice America Business Network, the bottom line in business.
Climbing Mount Everest is an amazing feat, and many have died trying to do so. However, more people have died descending Mount Everest than in reaching the summit. Part of the problem may be that people are so focused on reaching their objective that they fail to plan appropriately for what they will do or should be prepared for afterward. Similarly, people are so focused on saving for retirement and reaching retirement that they fail to plan appropriately for what they will encounter once they have actually retired. With 1 out of every 4 65-year-olds today living past the age of 90, you may be retired longer than you are actually working. Have you devised a plan, process, and discipline to ensure that you will not run out of money? If you are not sure what to do, then simply contact Peter Weitz and his retirement team at Fusion Analytics. We help manage human emotions using 3 proprietary investment techniques. Our job is to evaluate the forces that the typical investor can't see so that wealth is preserved and not lost. Find out more at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. In Black and Whites, we win by not losing.
Stephen Douglas Associates, delivering talent, impacting results. Now celebrating 30 years of bringing top talent to some of the nation's most recognizable companies and private equity firms, whether they need highly qualified executives permanently or on a project basis. Recognized by Inc. magazine as one of the fastest growing companies in America in 2012 and 2013. To learn more, visit us at www.stephendouglas.com.
The business community's first choice in Internet Talk Radio. Voice America Business Network.
You are listening to In Black and Whites. To reach Peter Weitz or his guest today, please call 1-866-472-5790. That's 1-866-472-5790. You may also send an email to peter@inblackandwhites.com. Whites is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. Now, back to this week's program.
Thanks. Welcome back to the show. I'm Peter Weitz. We're joined today by Matt Shore, the president of recruiting firm Stephen Douglas and Associates. We're talking about the war for talent. Prior to the break, we were talking about what companies can do to attract the best talent. And at the break, we were talking briefly about sort of where we are in the marketplace. And I kind of want to equate it to college athletics. And I'll be specific to the University of Florida Gators as I like to, promote the college of my guest. Last week was Florida State. But Matt, being a Florida Gator, you've got a great football team and an even better basketball team, number 2 in the poll. But they're going out and trying to recruit the best athletes. And they're chasing the best of the best talent in the United States. And when they get an agreement to have somebody make a campus visit, they need to go all out to make sure that candidate or that athlete has the best possible experience so that they can get that athlete to go to the school. And I think it's interesting because what they'll do is they'll pair them up with maybe somebody they know from high school, or they've done background on the interest and the hobbies of the athlete and pairing them up with a host that's going to have similar interests or hobbies. So there's something that can resonate beyond just playing football or playing basketball for the college. And in your analysis of what employers need to do, you come up with setting up the proper interview process. And I think that it absolutely equates well with what goes on in college athletics. And I want you to comment on that.
That's actually a great analogy, and it's one that I may use in the future with my clients, because I actually hadn't ever really compared trying to hire the best talent to college recruiting. But it's a great analogy. You know, we talk about putting together the right interview process, and clearly you're going to have to put people on the interview process that can evaluate whether the person can do the job and whether they're a fit for the job. And there needs to be one or two people in the process that are going to evaluate that, because obviously you need to make the right hire. But also important in that process is that you put people in the process that you know are going to represent the company well and sell the opportunity and sell the company. And I would tell you, it's very much like the campus visit. You know, if I go find you the very difficult to find right now 3-year or 4-year Big Four CPA, top grades, great image, very smart, totally motivated, you know, ready to light the world on fire, and I bring them into an interview with your company, and you just throw 5 people from your team on the interview process, and 2 or 3 of them are not necessarily that happy. And the same thing can happen at football. You know, if you pair somebody up with a defensive lineman who doesn't like his defensive line coach or isn't really happy with the program and maybe is regretting their decision to go to UF or go to FSU, and you pair your top recruit with that person, you're going to regret it. And that happens in the corporate world. You know, we have candidates come out and say they're not interested, and sometimes we're just shocked. And they'll say, you know, I really liked the person the position reported to. I really thought I could learn from them. But I got to tell you, I met a couple of the staff, and they just didn't seem that happy. You know, something about their body language, you know, a little comment they made here or there. I just don't think it's for me. And we're done. We cannot reel that candidate back in at that point. Because anything we say as salespeople or recruiters and anything that the line manager says who has the opening, they're just going to think we're selling them at that point. If the employees that are in the interview process do not come off as happy and inspired about being at that company, you will not get the recruits you're hoping to get. So think long and hard about who you put on that interview process. And you might want to just make sure that you know who's happy and who's not happy before you do that.
And it's amazing because it's interesting to think that the employees of an existing company actually assist in the recruiting process, but they really do.
Oh, absolutely. I mean, you know, many times people will want to meet with peers, even if they're in a different department, or leaders that are in other areas of the company that are going to be a part of their success or failure. And so as you meet different people through the organization, and again, sometimes there are people that will be on the same team you're on, you really get a peek, you know, kind of under the blanket of what's going on in that company. And, you know, candidates really appreciate the opportunity to meet more than just the person doing the hiring. And so, you know, again, it's very important to set up the right schedule of people, and then you need to make sure that each of the people on the schedule know their role in the interview process, so they can help sell the opportunity. Because if you get the right person on the hook, you don't want to lose them.
Well, and you also make a comment about, and you call it onboarding like you care. You know, onboarding is this big word that's industry buzzword that's used a lot. Just talk real briefly about onboarding, what it means, and what exactly, when you say onboarding like you care, means to an employer.
Yeah, so this is another critical phase, right? So we're experiencing last year and this year more than ever people turning down jobs because, you know, maybe it wasn't the right process, maybe they didn't give a great offer. But another thing that's happening that's a little disconcerting is now we've gone through this process, right? The company has gone to great expense. They've taken a lot of time to interview candidates, take them through a process, get them through an offer, an acceptance phase, get them past a counteroffer, because most of these great candidates are getting counteroffered again these days, and then they got a start date, and that person comes in on day one, and you know they sit down and literally get left there with no guidance. Their computer doesn't work. Nobody's really telling them what they need to do. And I'm just giving that as an example. We actually have a recent situation that we're dealing with where a client went through a lot of trouble to hire a very strong person, and that person's been there 3 or 4 weeks feeling very unsupported. The people that they're supposed to work with to get the information so they can get up the learning curve and start actually, you know, making an impact aren't being that cooperative. cooperative. The person that hired them is nowhere to be found. Their door's always closed, or they're not in the office, and they're feeling really lost. Like, hey, did I leave my job for the wrong job? And these guys maybe sold me a bill of goods here because I thought I was going to get some support walking in the door. It doesn't seem like anybody really wants me here or even knows I'm here. And so I would say that don't go through all that trouble to hire the best talent and then leave them languishing there without the support they need, because those first 2, 4, 6 weeks are really going to make a difference for that person in their confidence and in the decision they made, for one, and then two, in their ability to, again, the faster you can get somebody up that learning curve, the more you're going to get the impact of having them there.
Well, I think that goes back to our comment about, this whole sports analogy. You work really hard to get the right player into your program, and he comes there, and what you actually sold that player on isn't a reality of what exists, and then they become disenchanted.
Absolutely, and again, I love this analogy, and like I said, I'm going to wind up using it, whether I give you credit or not.
I expect I'm not going to get any credit, but that's okay. I'm good with that. Feel free to use my analogies. Anyone that's listening that you're talking to that's a client of yours is going to know it's coming from me, so I'm good with that. But Matt, I think that this was actually a really interesting program for me because I while you and I are sort of in related fields, because I'm working on a benefit side of people that you're placing in jobs. I didn't realize the severity of what's going on in the market and how really unhealthy it is for employers to go out and get talent. And I certainly am wishing I'm an employee that's got skill set in IT or accounting or finance to be able to go out and attract a job like this, because I'm in the catbird seat.
Yeah, and we as employers, right? So you mentioned my title as president, right? So a big part of my job is not just recruiting for my clients, but it's recruiting for my own company. I think a lot about how do we become an employer of choice. Now, I'm very proud that we just wound up winning one of the best places to work here in South Florida, because I know that's going to help me recruit the next person, and I know that's going to help me, if we have a great culture, keep the people I have. And I think as employers, we all have to really think about, how do I get the best people? In my industry, it's very hard to find great recruiters, great salespeople, and my industry is fraught with turnover. And I would tell you, I know my people are getting called, right? So I better be treating them pretty well and paying them pretty well, and making it a fun place to come to work every day, or I'm going to be losing people left and right, because I know that my competitors are calling in here trying to recruit my recruiters away. So it's not just my clients in the accounting department, the IT group that need to worry about it. I know I need to worry about it every day, and I think we all have to keep a good eye on what's happening in and outside of our organizations, and stay in tune with the market for sure.
Well, Matt, and I want to thank you for being on the show. I really appreciate it. I think this was very informative. Next week on the program, we're going to talk a little more about the economy as a whole. I have a really interesting research guest for you. Please make sure you follow us on Facebook, Twitter, LinkedIn, and my blog, In Black and Whites, to hear about it. But again, Matt, thanks a lot. I really appreciate you being on the program. Hopefully we can have you back on again soon. Other than that, have a great day, everyone out there, and thanks for listening to the In Black and Whites radio program. I'm your host, Peter Whites. We will see you again next week.
Thank you again for tuning in to In Black and Whites. Please join your host, Peter Whites, again next Tuesday at 10 a.m. Eastern Time and 7 a.m. Pacific Time for another edition of the program on the Voice America Business Channel. Have a safe week.
Thanks again for listening to the preceding program, brought to you on the Voice America Business Channel. For more information about our network and to check out additional show hosts and topics of interest, please visit voiceamericabusiness.com. The Voice America Talk Radio Network is the worldwide leader in live Internet talk radio. Visit voiceamerica.com. The views and ideas expressed on the preceding program are strictly those of the hosts or guests and do not necessarily reflect the views and ideas held by Voice America Talk